entries. In the personal account, we see about the names of persons. Names of persons like Ramesh, Suresh, Mr. X, Mr. Y, Z. And your names of persons mean not only the person, we have artificial person, like names of the institutes, or names of the organization, name of the company. That all comes under personal account. And even the names of banks, names of the banks like SBI, UBI, Union Bank of India, any bank name. So names of natural persons, names of artificial persons, names of banks or institutes or organization. This all comes under the personal account. And I said that in the personal account, we have a rule called debit what comes in, credit what goes out. Debit what comes in, credit what goes out. I'll stop sharing. Why? Because first we need to understand these three rules. Then we go ahead for the journals. How do we write journal and all those things. So here we have personal account. In the personal account, we talk about natural persons, artificial persons, and representative persons. Even representative persons. So natural persons means names of all the person like human beings. Artificial person means names of organizations, companies, banks name. And representative persons means suppose we have some salaries to be paid. We have not paid to the employees. In that case, we call it as outstanding salaries. There I cannot write all the employees' name in my accounts. Then it will be totally, I'll be writing the names of all my 1,000 employees only. So to make it clear, so what I'm doing, I'll write only in the name of that instead of writing that person's name, I'll write outstanding salaries. And even suppose, because we have discussed that we have a separate legal entity concept. As per this concept, owner, the person who is starting the business, and the business are two separate entities. In that case, if taken by the owner from the business, either in the form of cash or in the form of kind. In that case, we call it as drawings. Who is taking? Some person. Which person? Owner only. But can I write the owner per name in my own books? No, it's not possible. So in that case, instead of writing the person name, we write drawings. So this also comes under personal account. This also comes under personal account. The next. So as per this personal account, we have a rule called debit what comes in, credit what goes out. As per personal account rule, what is the rule? Debit whatever is coming into the business. Debit whatever is coming into the business. And credit, sorry, debit the receiver, whoever is receiving, and credit the giver. Debit the receiver and credit the giver. As per personal account, the rule is debit the receiver and credit the giver. Next, we have next account is real account. Here we take into consideration the things which are in real, like cash, which we can touch, which are in physical form, which we can touch and feel them, like all tangible assets. And even intangible also you may ask, ma'am, how can we touch goodwill, patents, copyrights? So here real means which you are fetching us the monetary transaction, which is providing us the monetary benefit to the organization. like cash, all assets comes under the real. Not only assets, even goods, purchases, sales, all assets like machinery, land and building, closing stock, cash in hand, cash at bank. So here real means which we can really see them, which fetch cash to the business or income to the business. And the rule is debit what comes into the business. Whatever is coming into the business will debit it, and whatever is going out will credit it. Whatever is coming to business will debit it, and whatever is going out will credit it. And the last one is nominal account. In the nominal account, we write all the expenses and incomes. We write all expenses and incomes. We write all expenses and incomes. So here the incomes are, what is this? Here we write all expenses and incomes. So in nominal account, we debit all expenses and expenses and losses, and we credit all incomes and gains. We debit all expenses and losses, credit all incomes and gains. So based on this, we write the journal. So we write the journal entries. So this here is the one of the question. Just we look at it and sort out how do we write the journal entries. If you look at here, the first one is Mr. Raj commenced his business with cash rupees 50 lakhs. Mr. Raj commenced his business with cash 50 lakhs. So if you look at here, we have a word called cash because dual aspect concept, matching concept. One will be debit, the other one will be the credit. And Mr. Raj is there. He's a person. It's a personal account. Raj is a person, is a personal account. Cash is real. I can touch and see that. So it is a real account. Raj is personal account and cash is real account. So what is the rule? Real account rule. Debit what comes into the business, credit what goes out of the business. So whenever you're writing any journal entries, you have to assume it is your business and you are the person writing these transactions. You have to assume that this is your business, and in your business, you are writing the journal entries. You are writing the journal entry. So now, if you assume it's your business, Mr. Raj is what is you owner. So when he's starting business, as per separate legal entity concept, owner is different, business is different. Though Raj is his own business, but the business is treated as artificial person. Business is treated as artificial person. In that case, cash is coming into the business because the owner is giving it to the business. As per real account, debit what comes in. So what is coming? Cash is coming into the business. So I will debit the cash. This is called debiting the cash. This is called debiting the cash. Cash account, debit. Who is giving? Raj is giving. I cannot write Raj's own business, his name. Instead of that, whenever you are starting business and whenever you are starting business with some cash you are bringing into the business, that is called as capital. That is called as capital. So here who is giving? Raj is giving. I'm not writing his name. Credit the giver. As per personal account rule, credit the giver. So I'm crediting the capital account. Who is giving this capital? Raj is giving. Instead of writing his name, we write capital account. So our entry would be cash account debit to capital account, that is amount 5 lakhs. And here after writing this, we need to write narration. We need to write narration. Narration is being business started with cash. Being business started with cash. I think you can just look at here. Yeah. Yeah, you can just look at it. Cash account debit to Raj's capital account, and the amount is 50 lakhs, 50 lakhs. Being business started with cash or being business comes with cash. And if you do not know how to write journal narration, no problem. You can write as it is, whatever is mentioned in the question itself. You can write Mr. Raj comes business with cash. That is also fine. Now look at the next one. Opened a bank account with SBI with rupees 10 lakhs. So what is doing? He's opening bank account. So whenever you are opening bank account means what you are depositing, you are keep opening account with some cash. If you normal individual also, if you want to open an account, you need to pay cash into the bank, then they'll open the account. So here we are opening an account with 10 lakhs. So who is the receiver here? Who is receiving? SBI. SBI is what? It's a personal account. Name of the bank is there na, SBI. So debit the receiver. It is personal account. Personal account rule is what? Debit the receiver. SBI is receiving. So my entry would be SBI account to debit. SBI account debit to. Whenever you are opening an account, what is giving? You are giving cash not to the bank. So we are giving cash. Cash is which account again? Cash is real account. Real account rule is what? Debit what comes in, credit what goes out. Now, when you are opening an account with a bank, is it the cash coming into the business or going out of the business? Yes. Whenever you're opening any bank account as a business person, is it the cash coming into the business or going out of the business? Tell me. Anyone? Is it the cash coming into business or going out of the business? The cash is going out of the business to the bank. So credit what goes out? Cash is going out. Cash is going out. What is the amount? It is 10 lakhs, 10 lakhs. So you can write again. Being opened a bank account with State Bank of India. That is our narration. If you want to check, you can cross check the journal entry. SBI account debit to cash account. SBI account debit to cash account. Next, look at the next one. Purchased fixtures and furnitures. Purchased fixtures and furnitures rupees 2 lakhs. Fixtures and furniture rupees 2 lakhs. So furniture is what? It's real, which we can touch and see. Yes or not? We can see with our naked eyes. We can see it. So it is real account. What is a real account rule? Debit what comes in, credit what goes out. Whenever you are purchasing furniture, furniture is coming into the business. Real account rule is debit what comes in. If you are purchasing, it's coming into the business. So what is coming here? Furniture is coming. Furniture is coming. So we write furniture and fixtures account debit. So whenever you're purchasing, do they give free of cost? No, we need to pay cash. So cash is coming into the business or because cash is also again real account. Debit what comes in, credit what goes out. So here cash is coming into the business or going out of the business. It's going out. So we'll credit the cash. This is called crediting. This is called crediting. That is our entry would be like this. Furniture and fixtures account debit. This is called debiting to cash account. To cash account. Next, look at the next one. Purchased goods for cash. What you are doing goods? Goods is for the business. Furniture is not for the business. It will be there forever business. And our work is selling the goods. So we are purchasing again. So purchasing means goods are coming into the business. It's again real account. Debit what comes in, coming in? Purchases. Goods are coming into the business because of purchases. So purchases account debit. Purchase account debit. To how we are purchasing? When you are purchasing, what you are doing? You are making a payment of cash. So to cash account. Purchases account debit to cash account. to cash account. Cash is going out. Next, purchased goods from Rakesh Traders. So here, if you look at here, in this transaction, say this it was asset, so we have written the asset name. Here it was only goods, so we written only purchases. But if you look at here, we are purchasing from Rakesh Traders. So they didn't mention the word cash. Cash is not mentioned here. Whenever it is not mentioned like that, it is an assumption that it is a credit transaction. It is an assumption that it is a credit transaction. Means we are purchasing the goods on credit basis. Credit basis means we'll purchase now and we'll make payment later. So we're purchasing. So we write like this. Purchases account debit. From whom we are purchasing? Here we are not paying cash. We are purchasing from Rakesh Traders. So it's a personal account. What is a personal account rule? Debit the receiver, credit the giver. Is the receiver or a giver? He's giving goods to us. Yes, he's a giver. So we'll credit him to Rakesh Traders account. To Rakesh Traders account. Is it clear? So if you look at here, we have 3 purchases. Let's look at that. I'll show in the journal entry also. You can just look it over here, have a glance. See, this is the furniture. Furniture account debit to cash account. Purchase account debit to cash account. Purchase account debit to trade Rakesh Traders account. Because this is a credit transaction. This is a cash transaction. And this is a asset transaction. Is it clear? Now let's move to the next one. Next one, paid for advertisement. Advertisement. So you should always think that whenever you're writing the journal entries, you should be able to first divide the transaction and see that it falls under what? Does it falls under personal account? Does it falls under real account? Or it falls under nominal account? Why? Because I said na personal account means names of the persons, names of the institutes, names of the banks. Yes. And the next one is real account. Here in real account, we write all the things or the assets which we can touch and see and feel them. Now, the next one is personal nominal account, where all the expenses and incomes are written. So now advertisement. Is it personal account? No, there is no name. Is it real account? No, we cannot touch and see that. Yes, it is an expenditure to us. So as per nominal account rule, debit all expenses and losses. Debit all expense and losses. So we need to debit the advertisement. Debit all expense and losses. So I'll debit advertisement. Advertisement account debit. Advertisement account debit. So what you are paying whenever you pay advertisement means you need to pay cash. Cash is again what? It is a real account. And its rule is credit what goes out. Cash is going when you're paying for the advertisement charges, it is going out of the business, so you'll credit the cash. So advertisement account debit to cash account. Advertisement account debit to cash account. Now next one, sold goods for cash. What we are selling? Goods. So goods is what? Again, it's a real account which we can touch and see them. Yes, obviously. So whenever you're selling, is the goods going out of the business or coming into the business? It's going out of the business. So when goods are going out of the business, what is the rule? Credit what goes out. Goods are going, so I'll credit it. And what we are receiving? Sold goods for cash. When you are selling goods, you will receive cash. Cash is again real account. Debit what comes in, credit what goes out. Now tell me, when you are selling goods, is it the cash coming into the business or going out of the business? Just tell me. Whenever you are selling goods, is it the cash coming into the business or going out of the business? Yes, please. So cash is coming into the business, or entry would be cash account debit to sales account. Goods are going out in the form of sales. Next, sold goods to Vinith traders. If you look at here, same sales, but they mention the name of the person and they did not mention the word cash. Whenever the word cash is not mentioned in that particular transaction, especially with regard to the sales and purchases, in that case, we assume it is a trade credit purchases or credit sales. So here they did not mention the cash word. So it's assumed as it is a credit sales. To whom we are selling? Winnie Traders. Winnie Traders is what? Name of that business. Yes. So whenever it's a name, it comes under personal account. What's the rule? Debit the receiver. When I'm selling goods, is receiving the goods. So my entry would be Winnie Traders account debit to sales account. To sales account. Similarly, with that of Robert Traders also. Entry would be Robert Traders account debit to sales account. Next, paid Mr. Rakesh Traders to check. So Rakesh Traders we purchase. Now they are paying us. We are making payment. So here they are receiving. Who is receiving? Rakesh Trader. Rakesh Trader is a person again. So he is receiving. Debit the receiver. Rakesh Trader account debit. How we are paying? We are paying through check. Means we write as bank. Check is going now to bank account. Rakesh Traders account debit to bank account. To bank account. Next, paid rent to landlord. We are paying rent. Rent is again expenditure. It comes under nominal account. Nominal account rule is what? Debit all expenses. So rent is an expenditure. How do you pay rent? Rent we pay in the form of cash. Rent account debit to cash account. Rent account debit to cash account. Next, wages. This is also an expenditure. Our entry would be wages account debit to cash account. Wages account debit to cash account. Next, we are paying salaries. Salaries is also an expenditure to us. So our entry would be salaries account debit to cash account. It's an expenditure. Debit expenditure. What are you paying? Cash is paying. Cash is what? Real account. Real account debit what? Credit what? Goes out. Cash is going. So salaries account debit to cash account. Next, received from Vinith Traders. So we are receiving. What we are receiving? Cash. So cash again, real account. Debit what comes in? Cash is coming into the business. Who is giving? Vinith is giving. Vinith is a personal account. So as per personal account, credit the giver is giving. So I'll write to Vinith Traders account. Next, received from, so again we are receiving from Robert. So our entry will be cash account debit to Robert account, Robert Traders account. Why? Because we are receiving cash and giver is Robert Traders. Paid electricity charges. Electricity charges is an expenditure. Yes. So as per nominal account, debit all expenses. What do we pay electricity charges? Means we pay cash. We write electricity charges account debit to cash account. So like this, we write all the journal entries. Just look at, we have a whatever entries we written, just we look at here once again. You can correlate with that. So advertisement to cash account, you have cash account to sales. We need account debit to sales account, Robert account debit to sales account. You can even look at here all these entries that are related to the sales and the purchases and also the payments what we have done. The next topic is ledger. Ledger is nothing but the simplification part of our journal entries. For example, we are purchasing from the like supplier. There is a supplier. There is a supplier from whom we are purchasing the from whom we are purchasing the goods. From whom we are purchasing the goods. Now, as a manufacturing organization, we oftenly purchase from it. For example, we purchased on first we purchased on 1st February.
We purchased on 2nd February. We purchased on 3rd February, or we purchased on 15th February from the same supplier. We are purchasing only for 1 month around 20 to 15 times, 15 to 20 times. Now, when do I prepare? Because as a business person, my main motto is to earn profits. My main motto is to earn profits. Now, to earn profits, when do I prepare all my accounts? I'll prepare all my accounts at the end of the financial year. At the end of the that is on either the calendar year that would be 31st December, or financial year that would be 31st March. Out of these 2 days, any date would be the where I prepare the accounts to find out whether I'm earning profits or not. Now, whereas I am purchasing from one supplier in a monthly around 15 to 20 times. So in a year, how many times I would have purchased? So at the end of that date, this particularly on these dates, maybe or this date or this date, if I find I need to go again check all the books of accounts and I have to check how many times I've written that person name. So it is like a labor work, it's a manual more and more work. It's time taking task. So to make it simplify, I prepare an account called journal accounts. Sorry, I prepare an account called ledgers. I prepare an account called ledgers. So from in journal, I'm writing all the entries I'm making that I purchased from so and so person on this date, that date, this date, that date. From all these dates I was purchasing. So now I want to at a time at the end when I'm preparing my final accounts to know whether I'm earning profit or loss. So it's highly cumbersome and a tough task for me. To make this simpler, I prepare an account called ledger where, for example, that supplier name is Mr. X. So I prepare Mr. X account. And in this account, I'll write whatever entries I'm writing now. I purchased on 1st February, I purchased on 2nd February, I purchased on 3rd February, like this. The all I transfer it to the I transfer it to the I transfer it to the ledger account. So how does that ledger account looks like? It is also called as T-shape account. It's also called as T-shape account. T-shape. Here I write debit and here I write credit. Date column, particulars column, JF number and amount column. Again, date column, particulars column, JF number and amount column. So the column settings are, first one is date, the next one is particulars, next one is JF number, means journal folio number. Just now we have written that we try to understand journal entries. There we have a column called LF number. From that we take that number and we write over here to make it our work simplify simply. JF number and the other one is amount column. Like this we write both on right hand side as well as on the left hand side. This is date column, particulars column, JF number, amount in. So same again, date column, particulars column, JF number and amount in rupees. So like this we write all the headings of that particular table, and in this account we write only the transaction that are related to the particular person. For example, in earlier problem, if you look at, I think Robert is a person to whom we were selling the goods. Yes. So our entry was like this. That is Robert account debit to sales account. Robert account debit to sales account. So we assume this is Robert account. We are preparing Robert account. The Robert account debit to sales account. Now tell me, Robert is in which place when we are writing journal entry? We're talking about Robert account debit we are calling. What we are calling Robert account debit. So Robert is in debit side. So we come to Robert account debit side and write here the date, whatever is given. For suppose it is 1st February. So I write 1st February. So what I'm doing on 1st February? I'm selling goods. Yes. So what is the opposite to that? Sales. So I write the sales. In Robert account, I'll write two sales. Two sales. Next, what is did he did payment to us? So the next entry was like this. That was cash account debit to Robert account. The next entry was cash account because he's giving us cash. Cash account debit to Robert account. Cash account debit to Robert. Now Robert is in which place? This is called credit place. Cash account debit to Robert account and the Robert is in credit place. So I'll come to the Robert account credit side. There I write what is opposite to him. For what purpose we are giving? Robert is giving cash. It's a payment to him. We write here by cash. By cash. So like this, I will write all the transactions what I did with Robert. So what happens at the end of the year when I'm trying to prepare or find out what is the profits I'm earning, in that case, it would be helpful for me to know at a time what is the amount I have yet to receive from that particular person. Or I'll prepare account that I'll come to know what is the salaries I'm paying in that particular year. So like this, I'll know what are the different things what I'm doing. I'll make it simplifier and find out what is the balances I need to pay or I need to receive that. So like this, we try to write all the transactions that are related to that particular person only or that particular expenditure only. That is called ledger. That is called ledger. So now let's look at the one of the problem. We'll try to solve it. Yes. So we just look at here. This is the ledger posting. You can just look at here. Yeah. There's, I think this is visible to you all. Is the screen visible? Yes, please. So this is the how the ledger account looks. You can just look at here. Date, particulars, JF number, amount in rupees. Again, date, particular, JF number, amount in rupees. This is credit side and this is debit side. And this is cash account. So in this, we write only the transactions which are related to cash only. Similarly, capital account. Here we write only the transactions that are related to the capital only. And SBI account that is related to SBI account. Furniture account only related to furniture purchase account. Like this, what happens, at the end of that particular year or the month or whenever we want to know or when we want to find out the balance of that particular account or we need to or we want to find out the profit or loss, it will be easy for us in preparation of final accounts. We'll look after any problem so that you will understand. So here they did from the same illustration 2 means what we have did in journal entries. From the journal entries only they prepared this ledger account. Let's see. We'll look at that journal entries and we'll try to sort out how they have written. Look at here. What was our first journal entry? Cash account debit to Raj capital account. So what they will do? First they'll go to cash account. Cash account, what is that? Cash account debit. This is cash account debit. So in cash account debit side, we will not write in the cash account again cash. Yes, we'll write why that cash transaction has evolved. For what purpose the transaction is evolved. So that cash has came into the business because it was capital given by the Raj. He has commenced a business with cash. So this we need to mention where in cash account. Similarly, in Raj capital account, it's in credit side. Cash was in debit side, it's clearly mentioned. And the bottom one, the next one, we call it as credit. This is credit. So your two capital account to Raj capital account. So we give to Raj capital account which side? Credit side. For what purpose he is given? He is given as cash. So now we look at the two accounts. So in cash account, debit side, they will write Raj capital account. And in capital account, they write on credit side by cash. And the amount is 50 lakhs. Let's look at that. E-subsidiary book is a special journal. And here in this, we have eight subsidiary books, that is purchase book, sales book, purchase return book, and sales return book, bills receivable book, in this bills payable book, as well journal proper and cash book also. So first we discuss about the purchase book, and in this purchase book, that is purchase book, cash, sales book, purchase return, sales return, we write only credit transactions. We write only credit transactions. And if you just look at, this is the format where we write purchase book. This is date, particulars, inward invoice, LF, details, and amount. So this is the purchase return format, and this is sales return. Here we write inward invoice, and here it is outward invoice, remaining all are the same. Purchase return, here we have debit note, and sales returns we have credit note. We write purchase returns, here we write sales returns. And this is bills receivable format, bills payable format. And this is at most important, that is simple cash book. Cash book, they're given simple cash book with cash and discount columns, and cash book with cash, bank, and discount columns. In simple cash book, we have only one amount column. Whether it is cash or bank, we write in the same column. And it's in cash book, on debit side, we write all receipts. Credit side, we write all payments. Debit side, we write all receipts, and credit side, we write all payments. And next we have is double column cash book, where we have two columns. One is cash column, the other one is discount column. Extra column will come, that in the earlier one it was only one column, now it will be two columns. And triple column, we have cash, bank, and discount column. We have three columns of amount columns, that is cash column, bank column, and discount column. So here they're asking us to prepare subsidiary books. They're given one question to us. Let's look at that. Cash in hand, cash at bank, capital account, bought goods for cash. So we can prepare cash account, purchase account, as well sales account. Just look at it, they already prepared journal proper, where we can't even write, because furniture is an asset, we cannot write in purchase book. That too they purchased on credit basis. Because in cash book we write only cash transaction. Interest on capital, that is also, it's not a cash transaction nor it's a purchase book, so it will be written in the capital journal proper. The transactions which we cannot write in the any other subsidiary book, that will be written in the journal proper. It's called journal book actually. So here sales we have, they are purchasing the sales and they have trade discount. That's sales book, that are credit sales. And purchase book, where we are purchasing on credit basis, and we have a discount. Next is cash book. In cash book, we have all cash transactions. Just look at here, I'll explain what are those transactions that will come in cash book. Cash in hand will come, cash at bank, bought goods for cash, withdrawn bank for private use, that is drawings, pay, we paid amount, received amount, paid into bank, advertisement, and salary to staff. Just look at that. See, this is all cash, sales, advertisement, salaries, payments received, drawings. So, and the difference would be the cash balance that is available with us in our business. Next is sales book. In sales book, we write sales returns book. We have what are the returns we have received, either from the customers or we are paying to giving back to the supplier. Next, we have capital account. The next one is petty cash book. Petty cash book means this is the small book. Very for small petty expenses, an amount is given to the cashier and he will look after that. The expenses such as, like for example, if you're having some textile shop where all customers comes regularly, there you will pay, you provide them some tea or some water. For that all expenses, he cannot all the give time, so he gives some amount throughout which month he have to look after that, and on that basis he has to maintain a petty cash book. For what purpose? Those expenses are met. And under this, we have impress system, analytical petty cash book. And that's it about the subsidiary books. And you can just look at your petty cash book. So these are the expenses that are made. And this is how the each column they maintain carriage, say station means they pay here, again they maintain an extra column. For what purpose they incur those expenses. This is about the cash. And the next topic is trial balance and rectification of errors. The other topic, rectification of errors and trial balance, we do it tomorrow. And we conclude for the day. Thank you. In the next class, we'll discuss the rectification of errors and trial balance.